Hey investors, Bradley here from Watson Estates, and you're listening to the largest and fastest growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcasts. Today we're going to talk about the news from an outside perspective. Is the news, this market crashing news that's coming at you at lightning speed, is that current news, or could that be a reflection of what we've just been through and maybe the tides have shifted? I want to tell you today, as we kind of round this first half being behind us of September 2022, well, things look like today because things are changing on a weekly basis, and I want you guys updated. That's why you're here on our show. And as well, I feel confident in being able to kind of share with you which housing segments I am most excited about in the next 3 to 6 months as it relates to the Greater Toronto Area housing market. So you're going to want to stick around. Obviously, can't go about talking about news without the biggest piece of news. That is the passing away of Her Majesty Queen Elizabeth II. I couldn't imagine what that's like. I mean, I met a guy the other day who said he's from Queens, but me being a guy from regular parents, I don't know what that's like. So I just can't relate, but I know it's a big deal for us as a country. And Monday will be a day of mourning for some people, and other people get the day off work. So that is where we're at, but we're not going to go down that rabbit hole. We're going to talk about what I do know, which is the Toronto real estate market and what exactly is going on. And anytime we have these kind of major shifts in the housing market, I find there's this disconnect of information. We have some people know what's going on. Some people are reading the headlines. Some people read the headlines and go deeper in the articles and still aren't getting the full picture. And I think it's important that we read the major headlines. That's what we do on our show as well. And our last episode, if you missed it, was very much doing that, kind of diving into some of the numbers that came out from TREB and some of the stats, and really analyzing how interest rates have been impacting the market. But today we're going to take a different angle, and I want to talk about maybe a little bit more optimistic than what we were speaking of last week. And I think there's reason for that. That's even taken place over the last week. We'll get to that in the show. But I want to start off with this conversation of, is the bad news of the housing market crashing, is that current, or is that now old news? I tend to believe that that's actually now old news. This is crazy because, I mean, this is still coming at us, but I think it's maybe capturing a picture that is done and gone. And there's been some changes in our housing market that I think are worth noting on this episode. It might give you a little bit more peace and comfort if you've been maybe shaken up by some of the scary news that's been flying at you as homeowners and landlords in the GTA. But I believe it's more old news than new news. And so here are some of the headlines, just to kind of give you a recap if you haven't felt this in your soul. This is coming from BlogTO. Home prices around Toronto expected to fall as much as they've risen. That article was published 20 hours ago, less than a day ago. We're not talking a while ago. This is now. They're expected to fall as much as they've risen, right? This kind of idea of a future failing of the housing market. Here's what they say. At the peak of the pandemic, many GTA municipalities and Southern Ontario towns saw home prices rise dramatically, but a new report suggests they'll likely decrease just as much, and it's already happening. You're in the middle of this big landslide that is the Toronto real estate market crashing. This comes from a Zoocasta report, by the way. Here's what they say. As the real estate market adjusts to the receding pandemic, we expect that areas that saw rapid and unprecedented appreciation during the pandemic will experience similar levels of price decreases as we return to balanced market conditions, reads the report. And they give us some prime examples in our housing market of specific cities that seem to be kind of really being hit. Just as an example, because we need examples. Hang on to these cities because we're going to talk about what's going on with them. But here's what they say. Their prime examples for this argument are Kitchener-Waterloo and Oshawa. They say both saw major price increases for detached homes, which is true, but prices have already begun to drop drastically. Watch out. Don't want to invest there now. That's how I read that. Kitchener-Waterloo saw 5 consistent months of record-breaking home sales from November 2020 to March 2021, and the average sale price of all residential properties sold in February 2021 increased by 32.1% compared to the same month the previous year. But, here's a big but. The average home price in the region dropped by 23%. Don't want to touch that with a long stick. That's from February 2022 to July 2022, a few months back, obviously. So that's a big disconnect. We're talking about what happened at the end closing of July 2022. A lot has happened since then. But then we jump to Oshawa, another prime example. The average price of a detached home dropped from 1.2 down to 855,000. That's significant from February and to August, a decrease of just under 30%. These markets, they're crashing. They're crashing. Zoocasa also predicts that increasing interest rates will continue to impact housing inventory and keep many out of the housing market, at least for the foreseeable future. So if there's any doubt that this is talking about a future, that line right there tells you this is for the foreseeable future going to price people out because of what's happening, namely interest rates. Just last week, I agree. In a lot of ways, interest rates are they're dampening the housing market, but that's not the full story. That's the big story, but it's not the full story. The brokerage also expects to see more motivated sellers in the market, which is good news for motivated buyers. Hang on to that thought. This idea that we're going to have an influx of sellers, people panicking to sell like we haven't even seen yet. When I hear them saying there's going to be more motivated sellers than we've seen over the last few months, there's been some pretty significant motivated sellers lately. To me, something smells sour, and it's because there is something sour. We're going to talk about what is actually going on. But CREA, Canadian Real Estate Association, kind of following TREB, their stats are always coming out a little later, talking about the country as a whole, but how valuable is this to know? The Canadian Real Estate Association cuts its home price forecast for the year as values declined for the sixth straight month in August, with smaller Ontario cities shouldering the largest declines, right? Some of these outskirt, smaller cities, they're the ones getting beat up the most. They were the ones that seemed to outperform before. Funny how that works out. And I think when they look at some of the stats, condo owners are going to kind of laugh a little bit, even though things look a little rough right now, because they haven't really been hit. Anyways, we won't go down that rabbit hole just yet, but the central bank plans to continue down that path, which will further drive up the cost of borrowing, price more buyers out of the market, and in turn, put more downward pressure on home prices. More downward pressure on home prices. Now, note, as it relates to affordability, as it relates to interest rates, these things are absolutely true. This is a fact, right? You increase interest rates go up on your mortgage. People are impacted either in the near term in variable rate mortgages, a lot of people signing up for and experiencing the pain and trauma in an already indebted nation, or fixed rates are coming up for renewal when they were very low 5 years ago, are now experiencing major upswings. And I have seen sellers selling to avoid the repercussions of not being able to make those monthly payments. Yes, this is all playing into it. Yes, it will continue. And the repercussions of interest rates typically are long-term, not 6 months or within 6 months. These have been pretty significant declines. But there are also, as ignored in this article, and oftentimes myself as well, interest rates is just such a big headline. There are many factors that are pushing prices upwards. They exist, believe it or not. Here's an idea for you while we're on the topic of interest rates, and we're not going to go any deeper than this today. But if you are selling a home that has a mortgage that can be assumed, maybe this is a question for mortgage brokers. Are there a lot of them out there? I tend to think not, but I've heard the idea being circulated from mortgage brokers, this idea of being able to pass on an assumable mortgage to a buyer who is able to qualify for that same mortgage. That would be of tremendous value, right? If we can reduce the mortgage payments by hundreds, if not thousands of dollars a month by allowing that mortgage to be assumable, that is a value that you as a seller can offer that many sellers aren't really thinking about. And on the flip side, if you're buying a property and you're worried the numbers just don't work on this investment property unless I'm able to get the rates that I was able to get 6 months or a year ago, well, perhaps you can find something that is assumable and make those numbers work where other people would ignore it and thereby bring the prices down. That's a win-win that you can take advantage of. Look into it for your own selves. Assumable mortgages, if you can make it work for you in your portfolio, there's a great idea wrapped in there somewhere. But despite the lower forecast, large gains in the first 2 months of the year mean the average annual price will still be higher than in 2021. So we're looking at having it slightly higher. In fact, believe it or not, Canadian Real Estate Association is calling for an increase year over year. This is their adjusted number of 4.7% for the year. The guidance is lower than their June forecast, which set a 10.8% increase. To be honest, cutting it in half doesn't seem as significant as I would have thought, at least as I'm hearing the articles about. We're crashing. We're going to continue to crash. We're only 3 quarters through the year. We're going to continue to crash. And here we have the Canadian Real Estate Association claiming we're going to pull back our numbers, but only, we're still thinking of a 5% increase. Meanwhile, I'm hearing all of these ideas of numbers of prices being below where they were this time last year or flat where they were this time last year. It doesn't really line up until we actually understand what is truly going on. But the private sector economists are predicting home prices will bottom out next year, with some saying the national average price could fall as much as 25% from February's peak. There you go. So we're looking at, so I guess the question is, what was February's peak, right? Where there's just I think it's not, obviously it sells headlines. The headlines sell newspapers and readers, myself included, because I want to click and see what's going on. But when we start comparing against February, there's a huge break, right? Like you can start to say we're seeing major collapses since February, because there's nothing sexy about flat prices this time last year. Like that's not sexy, right? Collapsing is sexy. Growing at astronomical paces is sexy. So if we can build that in, but then it creates this level of confusion. And if you just kind of, just fight through the smoke a little bit, it's not so bad. But the media would have you believe that the market is going down the pooper. Except unlike the Queen's funeral, we're stuck listening to royalty-free music. Now, here's an update from last week. And this is why I was really eager to do this episode for this particular section right here. We were talking about how interest rates went up 0.75 of a percentage point. And I think that is still very interesting, because that number there seems to be this kind of fight to increase rates. But there was a general understanding in the market as a whole that rates were going to kind of end there. That was going to be the end. And one of the big things that we talked about last week on the show was that there was pretty much clear direction laid out that there's going to be more increases to come. Maybe two more this year, at least one this year, as far as my book goes, from how I'm reading into this. We're fighting to get inflation down to 2% at the end of the day. Whatever that takes is what's going to happen. And here's something to keep in mind. If the housing market is strong and hasn't been impacted in the long term, if we have a 5% increase in home prices, that's not really 2%. Now, they're not tracking home prices as in that same way as part of the index. But all that to say, the Bank of Canada is going to look and say housing prices aren't that bad. And they'll get away with further interest rate increases, right? And there's kind of the spiral that'll take place. But what I said last week was having this kind of indication that home prices are probably going to go down, because people are going to say, whoa, we've got interest rates going to go up. That's new information. But I'm not seeing that play out in the segment. So in a sense, week over week, I'm wrong. I'm not seeing that. In fact, I'm seeing, at worst, continued flat prices from last week. There doesn't seem to be a reflection in the prices having really been changed by that information. Maybe I overestimated what that would look like. So that kind of begs the question on, how much has the market kind of buffed in for this interest rate? Are we just accepting that we're going to have continued increased interest rates? If so, then the news is behind us, right? And that's kind of where I'm sitting today. And so we're going to break it down on what the real story is in the GTA right now. And I think this episode is going to go down. There's several episodes over this last few years where we've seen markets ups and downs. I think this episode will act a bit as a marker for a shift, a major shift taking place in our market. And in some ways, maybe you've heard it here first, but I'm going to share some articles that are talking in and around this subject. But unless we have some new massive change of information, I don't see things going back to what these articles have kind of been portraying our market being headed towards. So let's get into it, guys. This is, to me, what the real story is in the GTA housing market right now. We're going to jump over to a Move Smartly article here. Looking at the most recent statistics for the Toronto area market for August 2022, we are starting to see signs that prices may plateau for now after falling over the previous months as inventory levels remain low. There's been an adjustment. The average price for a home was 1.3 in August, down 22% from the peak of February, but down 1% over last year. Remember, Korea is expecting a 5% year over year. But here we are. So how sexy is that, where prices are down 1% year over year? It's not. We want to talk about what happened in February. The old news is this. House sales in August were down 30% over last year, but up 17% compared to July. The new news, to me, is the months of inventory, which is a measure of inventory related to the number of sales each month, which declined. Months of inventory declined. That's right. 2.8 months of inventory in July to 2 months of inventory in August. September is probably going to continue this trend, indicating tightening supply conditions. Does that line up with your rush of sellers? In the condo space, the old news is this. Condo sales in August were down 41% over last year and below pre-COVID sales volumes for the month of 2019. The new news, I love new news. That's such a good word. It's such a good words. The month of inventory, even for condos, the lone condos out there, dropped from 3.6 in July to 3 months of inventory in August. Guys, these are pretty, months of inventory is skewed by the way that we kind of market properties on MLS. So that's fair. But the fact that we're seeing a trailing months of inventory going down shows you that there's a tightening in both, pretty much across the board as far as segments go. We've seen some interesting trends on the ground over the past month in the Toronto area that line up with what we are seeing in the August sales statistics. Firstly, buyers are deciding to jump back into the market this fall. Home buyers will often hit pause on their home buying plans during the summer months and start looking again in September. But given today's interest rates and cooling prices, they say, I wasn't certain what this fall market would look like. We have been seeing a lot more activity and interest from buyers, and many actually started their home search a bit early in late August rather than September. Because, there was a lot of talk, myself included, about having a bit of a spike that would take place in the fall. People want to get ahead of that. We saw that come in through some of the August sales numbers. But this helped push August sales above July levels, a period when sales typically fall on a month-over-month basis, aka a hot and early fall market took place. What's been very difficult since COVID is this idea of seasons. I think seasons played themselves out really well this summer when people kind of took a pause. But was that seasons or was that interest rates? I think news and changing of trends has actually played a bigger role in the last few years in our market than when we've even seen happen as far as seasons. There's a very real possibility we could see a pretty boring and lame May 2022, which we saw, but also a very heated November. Right? And now into the winter months. And we've seen that in recent years as well. So don't get caught up too much on the seasons, aside from the fact that people seem to be pushing this fall a little bit early and higher than many expected. This could have gone either way. So back to this idea of panic sellers, because on one side we got buyers, but then what about sellers? Aren't they panicking? We heard that that's what's coming. Well, the other trend we're seeing is a lot more patience from sellers. The days of panic sellers who were desperate to sell because they already bought a home as the market started to slow down earlier this year are behind us. That's old news. Many of today's sellers are deciding to list their home for sale before they buy their next home, which is lovely, which is allowing them to be more patient. In some cases, sellers are deciding to take their homes off the market if they're not getting the price they want. Prices can be sticky. We've seen that. We've talked about that on our show. Well, that is now the case. It's becoming the case. Interest rates are getting so high, people can't afford. They're going to panic. They're going to sell. There's going to be power of sales everywhere. Doesn't look that way. At least not right now. While high interest rates are definitely continuing to dampen buyer activity, how this impacts prices depends a lot on the volume of new listings. If new listings surge, we see further downward on pressure. But at this point from what we're seeing, I don't think we're going to see a significant increase in new listings in inventory this fall. And that's what they say. And me neither. I don't see it. I just don't see it. Even talking about power of sale, it's not like you just have a blanket of new listings come on and people, losing their shirts all at once. Speaking of which, you like my new shirt? For those of you listening to audio, it says dad jokes loading. The girls, they know me so well. But when we look at these things, I don't see it. I don't see that playing out. And let's see. They overplayed the interest rate increases than many people expected. And here we are. Now, none of this to take away from the fact that, yes, prices have dropped. People have been on the sidelines kind of saying, whoa, this is crazy. You're right. It was crazy. But it doesn't look like that now. This is what I'm saying. So here are some key facts about the new market that we're in that I'm looking at. The average price for a home in August was 1.3 in August 2022, well below the peak of 1.679. This is looking at, I believe this is Toronto area, which is down 1% when compared to the same month last year. So one of the points that I had here is that prices, if we're talking about it being flat year over year, we're talking about Korea stats being up 5%. Treb stats would actually be up slightly too. So generally, the real estate boards are expecting prices will go up from where they're kind of standing today. And so how I'm looking at it from just that very limited view is, in a sense, we've hit the bottom. In a sense. Unless the information changes, right? Unless we get this something out of the norm happens again. But from where we're standing today, it seems from a prediction standpoint, from economists and drops, and even when we look at trend lines, like recent trend lines, not long-term trend lines, but recent trend lines since, call it, 2015, we're kind of in line with those trend lines now. So it's really, if we have price drops, you can't expect to see another 20%, can you? If you guys do, leave it in the comments. Let me know. But That's one side of the argument. And then here's another argument. The share of homes selling are more than the owner's asking price decline in 26% in August. So we have a 26% of homes now selling over asking, which is a significant drop because it was floating around, looks like 80 to 85%. So we have a more healthy and balanced housing market. So when we're talking about the market is going to reach a balanced state, that's kind of where we're headed. We're there. Like that's where we are. That's where we are. Even when we look at sales to new listings ratios, they've landed in and around, and in fact have changed direction now. We'll talk about that. But they've landed in this balanced market territory. So to say we're going to crash until we reach balanced market territory, we have. Homes are being priced mostly in line with estimated selling prices, which is a great thing, by the way, being out in the market, and why people are comfortable to sell first and take their time. And it's just a nice thing. And I hope it stays that way. I don't think it will be for long. But maybe that's where interest rates can kind of partner with us to keep the housing market on planet Earth. The number of houses available for sale or active listings was up 80% when compared to the same month last year. So we have an increase in active listings, but it's still well below, listen to this, well below pre-COVID levels for the month of August. So in the long term, pre-COVID, actually the number of active listings is lower. It's not like it's excessively large despite the growth. I mean, we're playing this against a picture that was extremely tight. So even on that front, things are looking pretty okay. Okay, so let's break it down from houses and then condos. I want to get down in specific regions what average prices have done. Okay, so we're going to look at houses, okay, detached. So actually, this is, I guess, just houses. So this would be any low rise. So it was down. We're looking at, so when we look at Durham, so prices year over year, we'll just think of the prices for now, are down 1% year over year. Halton down 1%, Peel down 2%, Toronto down 2%, and York is up 3%. So generally flat across the board, right? East to west. When we look at condos, here's the big difference that we see. Well, condo sales, look at Durham, up 7%, Halton up 5%, Peel up 5%, Toronto up 3%, York up 2%. So when I was getting those phone calls from people, I got condos and everyone's making all this money and what should I do? The conversation lent itself to, don't worry, your time will come, right? These things, they have an elastic band effect. And just as fast as we saw the low rise, we actually saw a pullback that was more exaggerated than we did in the condo space to have a net effect of actually a benefit to condos this year. How fascinating is that? It also explains why we're going to start to see a bounce back in the short term in that low rise segment to try and play catch up, which brings me to this next segment, which I'm super pumped about because it's what segment I believe is poised to have the best growths. There's two in the next few months. And this segment is exactly why the show exists, right? To share where the market is headed. Like the gynecologist Knight what they used to say to the Queen. This is just not a good joke. Where are we going with this? Okay, here it is. Like the gynecologist Knight used to say to the Queen, I am at your cervix. That's terrible. That is terrible. Anyways, what is the real estate market birthing these days? Which GTA housing segment has me the most excited in the next 3 to 6 months? Here we go, guys. When we're looking at the sales to new listings ratio and reviewing across the GTA, let's start with the detached. This is a good indication of what's to come. Now, this stat is only available for the month of August, so we're not talking into September yet. We're going to talk about what prices are doing in September in a couple of these markets. But sales to new listing ratio will give you, it's kind of a precursor on what prices are expected to do. I really love this metric, especially right now. I think every kind of change in the market, there's a stat that I kind of lean towards, and this one seems to be one that's really telling the story quite well. So the detached segment right now is floating at 43.9%, anything from 40 to 60% being a balanced market. So the detached segment in the GTA as a whole is in balanced market territory and trending upwards, by the way. I think it was floating in the mid 30s the month prior. Condo apartments, okay? Condo apartments is sitting around 34.2. So as far as the highest chance of cooling off goes, the condo market does. Does that not line up with the fact that condo markets have kind of been doing better net year over year? That kind of makes sense. So technically in a buyer's market, but also trending upwards. It's only going to be a couple of months probably before condos are into pretty solid balanced market territory. And you start to see that leveling out following into the condo space. When we look at condo townhomes, these are freehold. It's floating at 41.3 on the low end of a balanced market already. So here we go. Where is there going to be in the short term? We're talking 3 to 6 months. The highest upside potential in my book It's this conversation we've had time and time again of this little section called the missing middle. The missing middle. It's funny how affordability plays itself right back into the same story. And when we look at the missing middle, these are entry-level, low-rise units where family can thrive, 2-3 bedroom units, and just kind of in this middle market that is known for having a massive shortage of supply. So here we go. Freehold townhomes. Remember what I said, 40 to 60% is balanced. Anything over 60% is considered a seller's market. How crazy would it be if we had housing segments that were in seller's market territory right now, especially with the type of news that's out there? Well, believe it or not, open your eyes. Freehold townhomes are at 71.5%. That is in August. That's not September. It'll be interesting to see what plays out this month. And semi-detached, just under 75%. Sales to new listings ratio, a massive jump, just barely grazed that kind of buyer or that balanced market territory and quickly bounced his way back up into the into seller's market territory. And so here's where I want to put icing on the cake. Remember how we talked about the prime examples of how the housing market is crashing, the news that was released within the last day and comes from many, many news sources. I'm sure you're seeing it too. And even after this post, you will continue to see these articles coming out. Well, Kitchener, Waterloo, and Oshawa. Okay, let's see what is truly happening in these markets. Okay, let's start with Kitchener. All housing types, the absorption rate is now at 52.5%. So floating on the high end of a balanced market, but keep this in mind, it was floating close to 40% the month prior. I would be very surprised to see that number go down, and I expect it will only inch its way closer and closer into a seller's market territory in Kitchener, the prime example of a crashing market that we've been looking at. Did it crash? Absolutely. But it's not doing that now. And no better picture can be painted than Oshawa. Holy jumpin'. Oshawa right now is sitting for all housing types combined at a sales to new listing ratio of 80%. That is better than the segments that I think are going to be kind of optimized. Oshawa looks poised for a very, very solid next few months because the market is just so tight. Inventory has gone down just as much as sales. In fact, more, right? Because people have pulled houses off the market as well. So both Kitchener, Waterloo, and Oshawa have prices rising right now. Their prices are actually going up if you look at what's been playing out in the first half of September. And that, my friends, is the real story. With a tighter sales to new listings ratio, prices will continue to trend upwards. And it's simple science, right? Just like if Queen Elizabeth accidentally farts during dinner, the other guests are supposed to pretend like nothing happened. Noble gases should have no reaction. Simple science. There's an information imbalance out there in the housing market. That's where there's opportunities for us as investors to capitalize and to be real winners as things are making their changes. So my encouragement to you guys and my best advice to you guys, don't take what I'm saying here as gospel. Do the work yourself, do the research, but do something about it. Don't sit on the sidelines because, think about if you were one of those people who did in 2017 and 2020 when things hit the bottom and you sat on the sidelines, how much you kicked yourself. Are you going to be kicking yourself 3 times? 3 times is the charm, but hopefully not for the listeners of this show. I will see you guys next time. Take care and keep it real.